Good afternoon and welcome to BizTech Asia Midday Market Watch. I'm Samantha Voon, and let's start by taking a look at the summary of the market actions. So in Asia Pacific, markets mostly rose on Wednesday after the US Federal Reserve Chair Jerome Powell noted progress in reining in inflation. Investors also assessed a slew of economic data from the region. Over in Japan, the AU Aljibun Bank reported that the country's Composite Purchasing Managers Index (PMI) fell sharply to 49.7 in June from 52.6 the previous month, signaling a contraction in private sector activity for the first time in 7 months. The report highlighted a slight decline in services activities, the first since August 2022, which outweighed a marginal increase in manufacturing output. In China, the Caixin Services PMI showed the services sector expanded for the 18th consecutive month, but at its lowest pace since October 2023. The PMI declined to a 51.2 in June from a 54 in May. Traders in Asia were also awaiting the release of June's business activity data from India later that day. In Japan, the Nikkei 225 index rose 0.7%, extending its run above the 40,000 level, while the broader Topix index was flat. In South Korea, the Kospi gained 0.3%, and the Codex index increased 0.21%. In Australia, the ASX 200 edged up 0.2%, and in Hong Kong, the Hang Seng Index rose 0.7% in early trade, while mainland China CSI 300 declined 0.4%. The Chinese e-commerce giant Alibaba announced that it had repurchased 613 million of its ordinary shares for $5.8 billion in the quarter ending June, and its stock was up 1.7% on Wednesday. Over in US, the stock market closed at record highs overnight, with the Dow Jones Industrial Average gaining 0.41% and the S&P 500 rising 0.62% and the Nasdaq Composite jumping 0.84%. Tesla shares helped lift the S&P 500 after the electrical vehicle company beat expected deliveries for the second quarter. So, to give insights into markets, we have our guest here, Jessica Amir, market strategist at MooMoo, coming to us from Sydney. Jessica, welcome to the show.
Great to see you again, Samantha.
Yes, it's been a while. It's really good to see you. Okay, let's get straight into it. So the second half equity sentiment is on a bullish runway. Can you share with us your thoughts on the reasons and what's happening there?
Yeah, so I guess it's for a trifecta of reasons, but I guess if we can just kick off just on the back of your intro, it's important to highlight that we are seeing our US equities back in record high territory, and this is really setting up, I guess, in stone what we're likely to see in the second half of this year, and that is we've got a trifecta of tailwinds. So first of all, we've just come off the back of the presidential debate, and we do know now that markets are pricing in a Trump victory. Markets like certainty, and so we're starting to see the bond market as well as other markets such as betting markets price in that Trump will be likely to be taking his second term. So we can see that with the yield curve steepening at its highest level since October. And if you have a look at sports betting apps as well, Samantha, I don't know if you're a bettor, I'm not, but if you do have a look at the odds are paying very little for a Trump victory. Whereas if you have a look at a potential Biden victory or Kamala Harris or other candidates, the payouts are much higher, obviously implying that Trump is likely to potentially be in the winning for a second term. The other thing that we do have supporting markets is financial conditions are easing. And of course, we've spoken about this before. We do have the the Fed running off their balance sheet from this month. And speaking about other catalysts that are building in this, we're seeing a boom of 24-hour trading. So we've got financial conditions easing, and we do have a flood of funds that are expected to hit the market in the second half. So that's the second catalyst for equities. But the second thing, or I guess the third rather, is probably the most significant, and that is that the Fed is now saying that there could be potentially getting ready to cut interest rates. So the probability is higher of 2 potential rate cuts this year, and we saw that with the Fed chair last night saying, hey, the data's starting to come in our favour. We're starting to see more signs of job conditions or the employment picture really looking like it's netting some support, and inflation is coming down as it should. And so that's why we've got this narrative that is really supporting our corporate earnings, with the market expecting the Fed to cut interest rates. So all in all, those trifecta of reasons are likely to support equities over the longer run. It doesn't mean, Samantha, of course, that we won't experience a pullback or a correction. We are in the midst of a bull market. A bull market meaning the S&P 500 is up 35%. The average or median bull market goes up by 100%. So yes, there's more steam to be added, but it doesn't mean you shouldn't be expecting a correction.
Great. So July is the best month of the year to be invested in shares, right, Jessica?
Yeah, spot on. Yeah, and it's just it's pleasing to see, I guess, for a lot of investors who are long or who are joining in on the rally, whether they're investing for the first time or adding to positions. We're starting to see this really play out. So you're exactly right, Samantha. July is, without a doubt, looking back at history, July is the best month of the year to be invested in equities. When we are speaking about equities, we're speaking about the US, so the S&P 500, and also in the Asia Pacific as well. We traditionally see the market rise up by about 2.6% in the US, and further down south, we see markets rise about 2%. Across the Asia Pacific in the month of July. And the reason for this is just quite simply, we do see investment managers really putting capital to work in those parts of the market where they think will get the most steam and momentum, and where there's likely to be the most earnings growth for the second half. And of course, we do know that we did see a lot of money taken out of equities towards the tail end of last week. So it's really about readjusting portfolios and rotating investors, or rather investment managers' asset allocation.
Mm-hmm. So Jessica, it's been a while since we had you on the show. We missed you. So where do you think the biggest opportunities are? Yeah. Where do you think the biggest opportunities are right now in the financial markets for the next 6 months?
It's a really good question, but I still think we just have to go back to basics and take an observational view. So if I can just start by saying I think that there's always a bull market somewhere, but if we just start with 4 key factors that are gaining traction that will probably see continued steam in the second half. And the first one is this. So we saw overnight the oil price rising yet again. So the oil price is now up about 14% from May. And so this sector, or this thematic of fossil fuels, we believe will continue to generate some strong returns in the second half of the year. So we're starting to see, I guess, production slow down in the US being one of the biggest oil producers. And this is at a time when we do have a Category 4 hurricane heading to the Gulf of Mexico. We do have the hurricane authorities in the US warning that there could potentially be a loss of life. So it's a very serious Category 4 hurricane that's headed toward the US. And this comes at a time when, of course, there is potentially increasing war concerns in between Hezbollah and Israel. So that's something that we're continuing to monitor. All in all, we are continuing to see strong earnings growth and profitability in fossil fuels. But if we just start off by speaking about the other three themes that are really gaining interest, AI and chips, they're continuing to build momentum. We do know, of course, Samantha, that's on the back of government stimulus and also corporate stimulus as well. On the government side for AI and chips, of course, we've got that $81 billion of stimulus coming from the EU and the US as well. And then, of course, throw in the fact that you've got Meta, Amazon, Google throwing in $150 billion of stimulus in their own volition in terms of investment into AI and chips. And then the second theme that's really gaining traction is commodities. So, of course, we need to construct these chips, and chips need copper, chips need silver. And so the copper price is doing quite well this year, as is the silver price. So silver is up by 22%, copper's up by 14%. And this is because we still are in a deficit in both of these commodities, more so copper. And then closing it all off as well, of course, for demand for AI and chips really taking off at an unprecedented rate, particularly with data centres. They need to keep the lights on 24/7, Samantha. So this is why we're seeing a price floor set under the uranium price. And that is why Constellation Energy and many other uranium companies are continuing to gain momentum, and they're continuing to dominate the leaderboard. And we really think this is where investors will find a lot of alpha and outperformance for the next 12 to 18 months or so. So those four themes we're watching really closely.
Right, wonderful. Thank you so much, Jessica, for sharing with us about all these things.
Thanks, Samantha. Great to be on and great to see you.
Great. Be sure to keep informed on the latest market updates on weekdays on 1 p.m. It has been BizTech Asia Midday Market Watch. I'm Samantha Voon, and this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.